If you can't do great things, do small things in a great way. My name is Breon Mills, and I would like to welcome you back to this ongoing training on candlesticks. Now today, we will be discussing the hammer candle, what it is, how to use it, and how you can use it effectively in your trading. Now the hammer is a bullish reversal pattern. In order for this candle to be identified as a hammer candle, the body's wick must be at least twice the size of the candle of the body. Now there is no wick at the top, but sometimes a small wick is acceptable. Now a hammer candle could be either red or green. Now let's take a look at the development of the hammer candle. The bears, they drive the price down to a day low. Then the bulls take control, and the bulls take control throughout the rest of the trading session to close. But the bears are at a slight advantage because the candle still closed in the red. Now let's take a look at the green candle. The bears opened the price, driving the price down to a low, and then the bulls, they take over, and the bulls push the price past the opening price to close. So we can say that the bulls had a slight advantage over the trading session. Now, our previous training was about the hanging man, and I know what you're asking yourself. Damn, the hanging man and the hammer look exactly the same. Well, what's the difference? Well, in order for a candle to be identified as a hammer candle, it must be at the bottom of a trend. Now, in order for a candle to be considered a hanging man candle, it must be at the top of a trend. Now, let's take a look at performing a possible trade utilizing the hammer candle. And remember, in order for us to possibly think about or using this in a trade, is the hammer must be at the bottom or near the bottom of a trend. All right, now let's take a look at this chart. Can you identify the hammer candlestick? All right, if this is the candle that you traded or that you identified, you are well on your way to making some phenomenal trades. All right, so before we jump into placing a trade, there are certain criteria that we like to see. We like to notice a trend. So we do have a trend going down. Next, we identify the candlestick pattern. And then next is confirmation. So there are two ways we like to look at this. We want to jump in if it's trading above the hammer or if it closes above the hammer. With experience in trading, you will make the best decision for you. All right. Now, here's another chart. Can you identify the hammer candlestick? All right, so here is a possible hammer that's possibly tradable. Now, as I said in the previous slide, some traders may jump into this possible trade once the candle start trading above the hammer. And for some traders who like to see where the candle closed, as we can see, this candle closed below the hammer candle. So for those traders, it's a non-trade. All right. Now let's take a look at this hammer here. Did you select this one? All right. So again, here's another possible hammer that we can use in our trading. All right. Now, if we look at the following candle, the candle closed above the hammer. So that makes this a great possible trade for us to jump in. All right. Now, here's a quick summary of the hammer candlestick. Remember, it's a bullish momentum pattern. The candle's wick must be at least twice the length of the body, and the hammer must be in a downtrend. All right, again, I would like to say thanks for watching. If this is your first time, make sure you hit the like, subscribe, and come on back for more wealth building information. Peace.